Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, September 3rd, 2014. It'll be day two of our short week coming back from Labor Day. Some positive signs for sure on Tuesday on what we saw in the trading today. I'll get to that in a moment. Let's start first by looking at the S&P. This is the E-mini futures contract, daily charts, daily bar chart, and it doesn't look like we did much. But in fact, there are some signs of life here that you'll see better when we look at the intraday action, especially after what we saw through most of the month of August. So I thought it was a good comeback day. We traded 1.7 billion shares on the NASDAQ. We'll look at that as well. That's a big improvement over the last 2 weeks. So just like we said, everything kind of snaps back, starts to get back to normal post Labor Day. We had some great trades today, a couple of really good setups that played out. The first 90 minutes wasn't that exciting, and I'll talk to you a little bit about what it means that we didn't really get the action until after that. I actually think it's a positive, even though it made the first 90 minutes less than interesting. Here's a look at the NASDAQ side. This is the NDX 100. It actually gained 13 points today. So I'll point out the S&P lost 1 point, so that's basically a nothing. The NASDAQ side gained 13. That's a positive. New highs, again, on the NASDAQ side. Was impressive, but here's the SOX. So even though the NASDAQ was up, the SOX lost 2. Here's the biotechs, which lost 4. So you got to wonder, where was the rest of the S&P, or I'm sorry, the NASDAQ side that was up? Let's take a look at volume here, as we like to do. Look at that current day, the last day, way up there again, 1.7 billion. Look how much higher that is than all of the last 3 weeks. The only day that was even close was that option expiration Friday that always sees some extra volume. So the entire 3 weeks leading up to this, we had all those volume problems, and here we are 1 day back from Labor Day, and there's still plenty of people on vacation, still not everybody back. As I said, it's going to start to climb, and even if we just start to get consistent 1.8 billion share days, we'll be happy. Here's a look at last year again. You can see if you look at the end of August there, it had dipped, and then first day back in September, only 1.6. Not sure when Labor Day was though that year, but you can see it was back above, hitting 1.8 mid-month or so. And the volume number just continued to climb into October, the great trading time of year, October, November. Dips a little bit in December as people are in the holiday mode, but it still stays much higher than what we just saw in August. So the worst part of the year is behind us for sure now. By the way, you almost never get a 9-bar setup in volume. You can see the count right here on the current volume chart. We actually had all the criteria to meet the 9-bar startup phase from our Comer and Seeker tool on the volume closing. That's amazing. That almost never happens. So then from there we spring back up. All right, let's take a look at the action intraday here on the markets. We'll go to the futures contract again. And this is 10-minute bars. I'm going to switch it to 5 just so we can focus a little more just on today's action. You can see the end of or you can see all of last Friday. The middle area of the chart here, there's between the 2 dashed lines. That's the Monday they opened the futures market just to let it roll some electronic trading. If you look at the volume down below that, there was nobody there. That was Labor Day trading. So obviously that doesn't count. So here we are coming in on Tuesday, coming back from the weekend. We got a little gap up. We filled that gap pretty quickly within about 15 minutes, kind of bounced from there. What was a little disappointing is even though volume was improved right out of the gate, matter of fact, we didn't even end up with a volume warning, meaning volume after an hour was above 400 million. We couldn't even break 350 million for the last 3 weeks. But still, for the first 90 minutes or so, we were stuck in a 5-point range on the ES, and that's been the problem, not enough movement. And then all of a sudden, after that, you see that we sold off kind of sharply, paused, sold off again in another wave, pause, sold off again. This is institutional program trading. Now what's interesting about this, a couple of points. First of all, they let all the retail folks just kind of trade around for 90 minutes and didn't bother getting in the way of that. Then they decided to come in and dump. And all 3 of the waves today were to the downside. It's the first real program trading we've seen in weeks. And the fact that it was to the downside, I keep pointing out, when we gapped up in the market, if I go back and take you back to the daily chart, let's do the NASDAQ so you can see the gaps. August, there were a lot of gaps up starting after the first week. It was just gap and then trade flat, or gap and push a little higher, just drifting, no volume. The minute the volume was gone, remember, there was still volume the first week of August. So the NASDAQ was sitting around 38.75 when it was trading the volume. The minute the volume dried up to zero for those 3 weeks, all of a sudden the market, it was like a great weight it lifted, right? And it goes from 3850 to about 4,000, over 4,050, 3875 to 4,075. A 200-point move in the NASDAQ, much of it on gaps that weren't even tradable because there was no volume in the market. Now, what's interesting is, of course, that implies that there's a lot of gaps that need to fill. And the question becomes, what direction were the big traders playing today? Even though the NASDAQ closed up 13, but you've got the stocks and the biotechs down. S&P closed down only a point, doesn't look too bad. But again, if you look at these waves on the, here's even on the NASDAQ side, you can see the waves. It didn't take it down as much. On the S&P side, see the waves? They're all to the downside. All the big bars are, and the volume even, are to the downside. So I think what you're seeing, and this is what I expected, I've been commenting on this, is you're seeing the institutions come in, they're starting to poke at selling the market. You know, they're going to get shorter, they're going to close out some positions. They're not going to do it all at once. It's not a rush to sell, but they're going to start pressuring the market. And don't be surprised if we head back and do the technical thing and fill some of those gaps. You've obviously got, you know, you could retrace 200 points on the NASDAQ, and all that would do would be retrace that area that we moved in August when nobody was around. So as for tomorrow, you know, again, I have a slight negative bias, but we'll be calling it either way, especially depending on what way the gap is. You know, we had some nice winners today. Rich had a win call short WYNN into the first hour or so's trade, and that worked for about 5 points. Again, something that we hadn't seen a lot of in the last couple of weeks because there's been no volume in the market. Is these triggers on these $180 stocks have not been running 4 or 5 points like that, and this one definitely did. He had the ERES as well. That worked. I'm sorry, I apologize. That's the incorrect symbol. EMES short as well. That worked in the afternoon. So you know, we're seeing movement. We're seeing technical activity off of chart patterns again. It's just day one, guys. It doesn't have to be the best ever, but it certainly is nice to see, and does kind of prove that exactly what we've been saying. August is just a very hazardous time. Volume this year really dropped off the mat. And professional traders should not be putting themselves at much risk when that's the case, whatever time of year it occurs at. It could happen at another time. So that's why we track volume. But with volume coming back just as expected, we should see a lot better trading in general. Hopefully both ways, but you know, whatever happens to the market happens to the market. We'll be in the lab helping you out. Charts as usual brought to you by eSigma 11 and 12. Take a free trial of our services if you'd like and inquire about our 6-month Tradesight stock mentoring program. Have a good day.